stock market. So let's start from the very basics and we can go to advanced level. But now this course is going to come, completely going to talk about the basics so that you won't even think about how I'm going to strong in fundamental, because I'm just going to teach all the fundamentals which is going to come under the basics. So watch full videos and full course so that you won't miss out any topic. So let's begin. you know Stock market is like entirely made because, for example, I'm just owning a company and I need to raise a fund. What I will do, I will go to a bank or I can approach there, but the problem there is I need to pay them year on year. Nearly, some banks would be a very cheap interest, some banks would be more. But if you take a business loan, it would be coming around, it's based on the countries. Each and every country has a different way of interest rate. So based on that, you can expect like 4 to 15, or if you go with the private companies, like private banks, then maximum it can go to 20 percentage. So this is the maximum range of percentage which each and every bank loans are going to get it from you. So as a business owner, if you pay this much of money, all your profit can go to them. So for example, if you plan to scale your business to next level, for example, you just have a one shop, and if you want to scale to 10 shop in a franchisee way, or if you want to expand, what can happen is you need to pay this much of interest if you're getting as a loan. So instead of that, what exactly you can do is you can list your company in IPO, which is nothing but you're just going to give a initial private, like public offering to the public. Like for example, if you go and pitch the investors, what they will do is you're just going to sell a share in a big amount, like 1% of share for this price, or 2% of share for this price, based on this is the market valuation. You're just going to sell it. Instead of that, you can sell your like stock to public. Like public is nothing but like me or some people who's going to buy a share, even if they have $1, or even if they have $100, even if they have $1 million, or even if they have $1,000. Whomever like willing, whomever is having money as a public, they can invest. So for making them accessible, there is something which is called as stock market. Stock market is nothing but your company is split into shares, split into thousands and millions of shares, so that if each individual is willing to buy share for the price what they have, they can buy it. So in this way, you're just going to sell your part of the company. You're not going to sell the company, you're just going to sell part of the company, and you're just going to give them the trust. If the company is growing, automatically more and more investors can come inside and they can buy your shares. So for building the trust, you need to grow your company. So for that, instead of getting a loan or instead of getting a debt from the banks, you're just going to directly sell your stocks or sell your shares to the public. So if you're selling to the public, automatically, what will happen is the trust. Public will see whether this company we are using in day-to-day life or not, or this company is really worth or not. Only if they have all the confirmations, they are going to buy it. They won't buy just like that. Only if they confirm this is really worth it, they will buy it. Otherwise, they are not going to buy it. Okay, so this how entire share will work. Instead of getting a loan for my brand, I'm just going to sell my shares. It's like I'm just going to split my shares. Like instead of selling 1% of my company or 2% of my company, I'm just going to split into millions of shares on that 1% or 2% or 5% or 10%, and I'm just going to sell it to the public. If like instead of getting money from banks and everything, you no need to repay them. Instead of that, public will gain profit when the company is growing by selling the shares to the investors who's willing to buy the share for what the price they are quoting for. Okay, in this way, even a normal user can buy it. I think you would get it very easily, right? I just tried my best to explain you in a very easy way. This how a share market is really works. In that year, I just given a four varieties of market, where before coming inside the market, these four stages are there. First thing is IPO. IPO is nothing but the primary market. Before it's listing inside the stock market, they are going to sell the shares to the primary market. Primary market is the real, the sell off will happen. I will explain you even more clearly what is a primary market. Okay, so primary market is nothing but this the place where they really gain money. Really gain money how? So, like in between them, there would be something called promoters. So, some like brokers, and who's going to promote the shares, or who's going to buy in a little bulk. They will be selling to them first. After that, they will be coming to the people of normal individual, whether they are willing to buy it or not. So that's where the IPO will come inside. So when the IPO is coming inside, what will exactly happen is normal people. But the problem in IPO is they will have the limited amount of stock quantity. For example, you need to buy a minimum of 100 shares. That's going to be the minimum. So if they have the minimum something, minimum means, like for example, for one share for $1 means 100 shares of minimum, which is like you need to have a minimum of $100. So when it's coming to IPO, I'm not saying after the IPO. I'm just saying on the IPO what will happen. They will have the limitation to buy it. So from this way, they will collect a huge amount of money by splitting out the shares into several pieces and selling to the people. So in this way, they will gain the money what they need. They will gain the money what they need. After that, they will use that money to expand their business to the next level. Okay, and what will happen is after the IPO time is over, the date of the launch date will come. Launch date is nothing but the secondary market. So here I just mentioned very clearly secondary market, which is nothing but the trading market, which is going to provide the real liquidity for the people who just bought IPO from you. Same time, people really can buy a single share on that time. On only that time, people can buy a share on pieces, like single pieces. They won't have any limit. Even if you have fraction of share, even if you have $1, you can buy a fraction of shares. So that's like in US. In other country, things would be little different. So based on your country, you can go through that. Okay, in some country you can buy a minimum of one share, like that. In US, you can buy a fraction of share even if you have any money in your hand. So even if the $1 you have, you can buy a fraction of share, which after the IPO, the secondary market will come, where in the secondary market people can trade each other. So whomever has been bought an IPO, they will start selling, or they will even start accumulating more if the company is giving a good growth. If peoples are like in IPO, people and normal peoples are started accumulating, what will happen is automatically the price will go up. If the price will go up, what will happen? Investors are happy, even the company is happy, because company now, for example, if they sell for $1 when the IPO launch, now they just sold out nearly 20% of their full stock, full share what they have. In that, they just sold a 80% they are just having in their hand remaining. So what will happen is if the price is like jumping to $2, if they're selling remaining of 5 or 10 percentage like that, for example, I'm just saying it's not going to work like this. I'm just saying. So 5 to 10 a percentage if they are selling, what will happen is automatically they are like, for example, instead of raising money from the banks and everything, this would be very easier to make their business to the next level. Even their valuation and the market cap can grow, and same time they can sell their share whenever they need money for growing their business, like this way. Or they will be like pledge like whatever the shares they have, and whatever they just pledged as a loan, they will get it as a loan for that money. For example, if they're pledging 10%, if the 10% value is let's assume $1 million, in that $1 million they can maximum give 80% of loan for the share what they have on the current price or on the average price. So the calculation would be different based on the banks and the terms and conditions of the bank what they exactly have. So this how the stock market will work in the secondary market, and the stock market will work. Now, next one is the price discovery, which is nothing but the market determine the fair value. The fair value, which is nothing but the value between the book value and the value between what people are quoting and making the price higher. So this value would be determined by, really, determined by the, traders. It's not determined by anyone. If a lot of peoples are like willing to buy the stock more and more, to if they see any growth in the future, or if they see a huge profit, or if they see the huge orders coming for that company, they will start buying. So automatically the book value would be 0.5 cent, but the current price would be $2 or $3. It because of the demand is more. Okay, it not doesn't because the market is manipulating or something. It's because the investors are too hungry to make a huge profit in the long run, or they're just too hungry that this company is going to perform good, so that they're just buying a share. So in this way, even not only the angel investor, a normal investor is also can be participated inside, and you can make money. So this how a stock market will work, this how it will start, and this how it will go. Even if you're starting a company, if it's growing to the next level, or if you want to take the next level, you can also follow the same steps. Okay, so we can see on the next video, so that things would be more and more clear.